The world is changing fast, and so are the local real estate markets. Don't worry, though. We've got you covered. Welcome to the Real Estate Revolution.
That's right. Welcome to the Real Estate Revolution podcast. I am Kip Lohr, your host with Lohr Real Estate. I have Ryan Neal in our Eugene office today. Hello, Ryan Neal.
Hi, Kip. Thanks for having me on the show again.
Well, the show would not be the same without you. So I'm in Bend today. You're in Eugene today. We've been having some smoky conditions here today. How's the weather over there?
Well, so I was just backpacking last weekend on a trail pretty close to Diamond Peak, and around 8 p.m., the air suddenly filled with smoke. And, of course, being in the wilderness, you don't know where the smoke is coming from. So we pretty much hightailed it from there. But as it turns out, we have several large fires after this hot, dry weather we've been having right back in the middle of fire season. Yeah,
unfortunately. And the smoke that we're experiencing here in Central Oregon actually is a lot better today than it was kind of late afternoon yesterday. But it's smoke from that fire that's near Oak Ridge. So we'll have to keep an eye on that. That's just kind of part of, you got to take the bad with the good here in Central Oregon and there in Eugene, but you got clear air over there, right?
Oh, it's very clear, very lovely.
Yeah. Well, things are cooling down a little bit, which is nice. And so as always, we turn to you for our weekly market report. And this week you've got basically an end of month report for us, don't you?
I have an end of July 2022 summary. So yeah, have some numbers to share.
Great. Well, with no further ado, why don't you just take it away?
Okay. Last week, we kind of took a deep dive into what's happening in Bend, Redmond, and Eugene Springfield's markets. And we don't have a whole lot, which will be new if you listened to our episode last week. We have numbers from the end of the month, whereas last week we just had the first 3 weeks of July, but nothing too surprising, has developed since then. In Bend, buyer activity is down significantly year over year. Pending sales, we had 232 in July, which is down 33% year over year. New listings are also down about 23% year over year. But, we do have an excess of new inventory coming in compared to what buyers are snapping up. So inventory, it's increasing in Bend. We're up to 2.4 months right now, which is really, kind of in lines with what we were seeing in 2019, 2018 before the pandemic really hit. Definitely compared to the historical norm, we don't yet have a real surplus of inventory in Bend, but compared to what we saw during the last year and a half or so, it's definitely going to feel like there are more choices, out there if you're a buyer. So we were explaining last week that it appeared that prices were actually up in Bend, and that looks like that was kind of a temporary thing. Sometimes we don't have the full picture of the data until we have this end of the month summary. So we're actually down to $737,000 median, and that's still up 9.2% year over year. So prices, they're still hovering right up there. They're not quite at record highs, but this is far from anything that's really going to make it easier to buy a home, particularly with interest rates doing what they're doing. So in Redmond, we're seeing pretty similar trends what we're seeing in Bend. Pending sales are down 38% year over year. There were just 85 during the month of July. New listings, however, are also down 28%. So a bit of a surplus of inventory, but we're still in a situation in Redmond where the inventory is lower than it is in Bend. Now, the median sale price did drop in July in Redmond down to $509,000, but rather than indicating that price pressure is starting to ease off in Redmond, I think that's more reflective. There's just more activity at the lower end of Redmond's market because those sub $500,000 properties are just not available at all, hardly in Bend anymore. So people who would be going after those, are having to turn to Redmond. And as we explained last week, days on the market are really starting to increase in both markets. We saw in July the median go up to 11 days in Bend compared to 6 days in June. So that's quite a significant jump in a short period of time. And what the pending sale data is showing us is that these properties that went pending in July spent even longer on the market, closer to 20 days or even a little more. So one thing to note in Redmond is that even though prices went down to $509,000 in July, that's still 17% higher than what we were seeing in 2021. So Redmond's market, and we're going to see the same in Springfield, actually, they're continuing to appreciate at an exceptionally high rate. So moving on to Eugene and Springfield, buyer activity is definitely down in Eugene and Springfield. Well, actually in Eugene, but not in Springfield. We'll go into that in a bit. But seller activity is down a similar amount. So we're in a situation where inventory is not increasing significantly in Eugene's market. We're up to 1.1 months compared to 1 month in June, but that's still super low. And kind of as a result of the market continuing to be tight, we saw a record high median sale price of $484,000 in July, which is pretty incredible. So, we talk about this significant shift occurring in Bend and Redmond's markets, and definitely there's change from what we saw during the last 2 years. You're going to, see that pretty clearly, whether you're trying to buy a home or sell a home. Kip is going to have some specific advice for you later on in the show. But in Eugene, really what's surprising is that in spite of this narrative that real estate markets across the country are cooling down, we're really not seeing that happen right now in Eugene. Things are going to feel very similar there to the way that they felt a year ago when, markets everywhere were pretty much on fire. So in Springfield, like I mentioned, buyer activity is actually up year over year. It's up 21%. We had 110 pending sales happen in July. Inventory Springfield is also 1.1 months, but we're seeing prices appreciate in Springfield even more than they are in Eugene. So the median in July was $419,000. That's up 6% month over month, and it's up 16% year over year. So Springfield's market is very hot in the lower end. Once again, these properties are becoming harder to get in Eugene. I mean, there are plenty of sub $400,000 properties to be found, particularly in the northwest quadrant of Eugene, the kind of Bethel, Danabo area. But a lot of buyers are choosing to look for their home in Springfield rather than going to the northwest part of Eugene. So that's really indicative of Springfield's kind of rising status among home buyers. It's increasingly seen as a pretty comparable place to Eugene in terms of the quality of life. So it's about all I've got. Turn it over to you, Kip.
Well, thanks again, Ryan. That was really informative and, really in line with what we were talking about last week. And I think the thing that's really amazing with these new numbers are that we're seeing a departure in the two markets, and where last year we would have seen Bend, Redmond, and Eugene, Springfield being on very parallel trajectories as far as what the prices were doing and the buyer and seller activity. We're really seeing a little bit of divergence here now between the two markets. And what I thought I would talk about this week is a revision of the advice that we gave sellers when the market was, skyrocketing. And I think we'll focus in on the Bend and Redmond markets this week as far as new advice for sellers of how to cope with this new market that we see in Bend and Redmond. But I do think that it is time for sellers and listing agents to start considering some new strategies in the Eugene Springfield market, just because I think we're just going to see that market lag a little bit behind what we've been seeing in Bend and Redmond. But we are seeing on the ground some signs of increased days on the market in Eugene and Springfield, which I think is the harbinger for some strategy reconsideration. So again, thanks for your help today, Ryan. And when we get back, we'll just jump right into some new seller advice for this week's episode.
Thanks, Kip. Sounds great.
Welcome back to the Real Estate Revolution. I am Kip Lohr, your host with Lohr Real Estate. Thank you, Ryan, for that amazing end of July market report. Very enlightening. Today, we are going to be giving some advice to sellers. We have done this program before in previous episodes, but as we've been talking about the last couple of weeks, the markets in Eugene, Springfield, and Bend and Redmond are very dynamic right now. And as fast as inventory was flying off the shelves in January, February of this year, and for the last 2 or 3, 4 years, we're starting to see a dramatic flattening of the market. Now, we're not going to see market prices go down per se, but we are already seeing a flattening of the market in the Bend and Redmond markets. We talked about the numbers involved in that last week, but it occurred to me after that show that we should really get back with some advice to sellers, that the advice that we were giving sellers last year before, and even the beginning of this year has dramatically changed, especially here in Bend and Redmond. And to some degree, even the Eugene Springfield markets, sellers are going to really need to start rethinking strategies. So today we're going to talk about new thought processes for sellers, and hoping that your listing agent out there is educating you on what's going on in the market and helping you kind of revamp what works now versus what was working even at the beginning of this year. And so we'll give you several examples of that. And I think we're still in a seller's market to the extent that we are seeing still historic low inventory, even though compared to just a few months ago, the inventory is more than twice what we were seeing. We're still in that category of very, very low inventory. And so from that standpoint, sellers still have some chips, some cards in their hand to play. And I think the main difference for sellers right now, we'll start in the Bend Redmond market and talk about some of the changes that have happened over the last couple of months and, some of the things that you're going to need as a seller to change up in kind of your line of thinking and what your expectations are, how you're going to still get that top dollar for your place and be able to walk away with the equity that you're hoping to walk away with, but not fall into some of the traps that we're seeing sellers in the Bend Redmond area fall into right now. And so we talked about it a little bit last week, where we're seeing sellers still trending towards being over aggressive on prices. And so the first bit of advice we're going to talk about today is really knowing the current market price for your home. And in previous episodes, we've talked about how real estate agents, how appraisers go about determining value for your home. And so I won't get into too deep a dive on that, but I will give a little bit of a recap for those of you that haven't listened to those past episodes. And essentially what we're looking for here is to find homes that are as close to being like your home as possible. In some neighborhoods, that's very easy. Some neighborhoods, it's very, very difficult / impossible. And so there is a science and a little bit of magic, a little bit of alchemy that goes into determining value. What you're really hoping for as a seller is that you're hiring an agent that really, really understands the market, really understands how to price a home. And you're going to find lots of agents that use a price per square foot model, which I personally think is not very adequate in being able to really come in with a very accurate opinion of value for your home. And I won't go into detail with that, but just suffice it to say, I feel like it's a little bit lazy way of looking at value for homes. And here again, there will be some neighborhoods, some subdivisions where the price per square foot method works just fine. But for the most part, really getting into a more appraisal style opinion of value where you're going to find homes, hopefully within the same neighborhood or a neighborhood that is very similar to yours in a part of town that is either the same part of town or a very similar vibe as the part of town that your home is in. And then find a home that's close to the same age, close to the same square footage. And then once you find the comparable sales that have happened in the last 3 to 4 months, you want to pick those homes and then go into a plus minus kind of equation. So that's where the science or the math gets into play, where you're making modifiers for the differences in square foot between your home and comp that we're using, or the number of bedrooms, the number of bathrooms. Is it a single story? Is it a 2-story, single car garage, 2-car garage, etc.? And what we're trying to do is add value or subtract value from the comparable sale to match it up as closely as possible with what your home has to offer. And then at the end of the day, we've come to as close to a mathematical or a scientific value that we can. But then there's, like in wine, there are microclimates for these vineyards where you can have all of these vineyards that are pretty similar geographic location, but these different vineyards have very different climates within this same geographical location. And so in the same way, no two neighborhoods are alike. And, when we're seeing a shift in gears in the market, we have to kind of have our finger on the pulse of that. And then this is where the alchemy comes in. You have to make a judgment call of maybe a little bit of an additional add of value or a little bit additional subtraction of value based on kind of a gut feeling. And so once you come up with that value at the beginning of the year or all of last year and the year before that, the expectation was you're going to be off the market in 2 or 3 days and you were going to have multiple offers and then you were going to come in above your listed price. And so strategies, especially towards the tail end of last year and the beginning of this year, we were seeing agents advise sellers to be aggressive If my comp values, prices are going up so fast, you can't keep up with it. So my comp value comes in, let's just use a random number, $700,000 for your house. Let's start at 730. We know we're going to still get multiple offers, and we're just going to push that price as high as we can get. And so even though the numbers say your house should be priced at $700,000 today, we know that because it's hard to keep up with how fast things are going up, we're going to jump even above that line. And then we're going to expect getting, $50,000, $75,000, $100,000 above that list price. Well, that worked up until about February of this year. And there's a lot of sellers and a lot of listing agents, even now that we're to the middle of this year, have not gotten caught up with the latest. And the latest is really, as a seller right now, you want to get that base value. Again, let's talk $700,000. And then instead of maybe jumping a little bit ahead of that value, knowing that you're going to have multiple offers, knowing you're going to get above list price, you need to actually start below that number. And not because prices are coming down, but because the inventory has jumped enough, interest rates have jumped enough. Buyers have decided they've had enough. They're not going to write any more blank checks. They're really, really going to wait for the best home. They're willing to be more patient. So if you start below where the market will bear, you have the highest percentage chance of having a buyer or two or three come in at the same time and maybe bump that up to at least where you should have been at 700,000, and maybe you get 7.25. Maybe if you've got a unicorn property, you get 750. But if you follow the strategy that we have been employing here in Central Oregon for the last couple of years, what has happened is you will be immediately too high. Even if you start at the 700 mark, and your days on the market are going to increase. And so here's where there's two ways to look at that. So let's say you started at the 700. I think as long as you're willing to be patient as a seller and not freak out that your house didn't go off the market in 2 or 3 or 4 or 5 days, you priced it right. As long as you trust that your agent is good at what they do as far as determining value, then just hold serve and you're likely to get your number. If you start below the 700 mark or below where the market analysis came in at, you're likely to get at least that number that you should have got, 700,000, or maybe even a little bit more. The trouble is we're seeing people get scared. Maybe they started at the number they should have at 700, but they, after 5 days, are starting to freak out. After a couple of weeks, they're really starting to freak out. After 3 weeks, their agent's going to them and saying, well, we should probably do a price reduction. And maybe you agree to that price reduction. So now you have dropped your price and maybe you're still on the market for a while. So we're really seeing the days on the market increase, as you can tell from the numbers that Ryan just shared with us. And I think we're going to continue seeing that as a trend line. And here again, just as we're seeing that, inventory has gone up, so we're not at 2 weeks of inventory. We're at a couple months of inventory now, and that's still low. Even days on the market, 5 days on the market is ridiculously short period of time. And a more normal market cycle, we might see 30, 45, 60 days on the market, and that would be more normal. So I guess another bit of advice, other than making sure that you price your home correctly, is be okay with being patient. And I'm hoping agents out there are starting to coach their folks that, this is going to take longer than it did at the beginning of this year, longer than it did last year and the year before. But let's be patient. Let's not get too antsy too fast and start doing premature price drops. So patience, price right. I would say the next bit of advice that I would give sellers right now is you need to be as shiny a penny as you can be, which doesn't mean that you need to pay $100,000 to get your kitchen remodeled. What I mean by that is I always advise my folks that the curb appeal, the front porch, and as you walk in the front door through the entryway has to be, as shiny and spectacular as you can make it, because it's the first impression that buyers get. And hopefully before they open that front door, you've already set a really good impression of your home. So as they walk through the front door, they've got a great impression. You know what I'm talking about. You've driven by a house or you've walked up to a house and it's been like, ugh, they don't mow their lawn, or wow, the paint in this front porch needs touched up. What else is wrong with this house? And they're walking through the front door with this negative idea about your house before they've even seen how amazing and lovely it is on the inside. So at the beginning of this year, last year, year before, sellers could really get away with kind of being sloppy, and agents could get away with being sloppy. Maybe the pictures aren't as great. Maybe you're not going to go to a little bit of an extra time and money to make sure that your place is shined up. And here again, I'm not talking about doing major remodel. I'm talking about making sure that the paint is touched up. I'm talking about making sure that the yard is cleaned up. Maybe you've planted some flowers. Make sure that your lawn is watered and mowed if you have a lawn. Same with your backyard, by the way. You want people to walk through the house and get the impression that you actually care about your home, because they're going to have to imagine themselves in a home that they feel like was cared for before they bought it. And this is something that is just normal garden variety advice to a seller that has just fallen by the wayside because it has been such a ridiculous seller's market that sellers could just get away with being sloppy and lazy. Listing agents could get away with being sloppy and lazy, just throwing a sign in the front yard, a lockbox on the door, and then kind of just walking away from their listing. You want to make sure that you're asking your agent that you're thinking about hiring, do you follow up with every agent that showed the property? Are you getting feedback? You know, we have this system right now that a lot of agents in our community, both here in Bend and Redmond and Eugene and Springfield, using this automated scheduling system for showings. And here again, in my opinion, I'm going to be maybe a little controversial here, but I think that's lazy. I want to know who's going into your house. I want to get a phone call from that agent. It's not that much more work to be able to talk them through that agent. You know, give the agent a little bit of a sales pitch. Let them know how wonderful the home is. Give them a little bit of insight into it. Answer the questions right out of the gate so that that listing agent is going to show the house really is educated and knows what they're talking about. But here again, we're just in this place where there's a lot of laziness and sloppiness that's happened because it has been such a seller's market that the attention to detail has really gotten lost in the translation. So another little bit of advice to sellers is make sure that who you hire is really going to be on top of it. Make sure that they're going the extra mile because you're going to need that now. You didn't need that in January or February. You didn't need it at all last year. Buyers were writing a blank check. They were giving you their firstborn child. They were paying $100,000 over list. They were bringing cash to close because the appraisals weren't appraising out at the purchase contract price. Well, guess what? Those days are over. And for those of you that are, you sellers out there that are listed and you've been on the market for 60 or 90 days and you're listening to this program right now and you're going, wow, I would have liked to know that 60 or 90 days ago. Well, it's not too late. If things aren't working out with the agent that you've got, you need to find somebody else, then just do that. But understand that the damage is done. And so this is the other piece of advice to sellers right now. Get it wrong in the beginning, then there's no recovering from that. You have lost out on your opportunity to get the top dollar for your home, and you just need to understand that right out of the gate. There's more at risk than just accepting whatever agent will list their price that you feel like is the right price. I can tell you from experience, I've recently had several listing appointments that we did not get the listing because we would not take their listing at the price that they wanted to list the home. And so another bit of advice for sellers here, don't overprice your home. It is a death knell in getting that top dollar. So I think hopefully, I'm not coming across too harsh here or too controversial, but the climate has changed dramatically for buyers and sellers, especially in the Bend Redmond area in Central Oregon. And so buyers are becoming way more comfortable with being patient and looking at a lot more properties and waiting for the perfect place. And sellers have not caught up yet. A lot of sellers have not caught up yet. And they're ending up having to literally pay the price because they're just following advice that no longer applies to our current market. So I want to end this program today by saying that we'll have another conversation next week about buyers, readjusting what the expectations for buyers should be as far as what kind of strategies that they need to employ. They will be kind of a counterpoint to what we talked about today. And so just as a recap to sellers this week, price your house right. Be willing to be patient and be willing to go the extra mile and leave no detail left untended to. Make sure your place is really spotless and really shining as shiny as it's going to get. And I can guarantee if you follow this advice, you're going to still be able to get that top dollar that you would have gotten even in January or February. You're not going to get $100,000 over list price, but you're certainly going to get what the market will bear. For properties that are really, really high in demand, we're going to still see offers and sales above list price, but we're starting to see that percentage of sales price versus list price start to dip below 100%. And that's because we're seeing sellers just that aren't ready to shift gears in the market. Can you still get your top dollar and get that equity out? Yes. You got to do a little more work, and you have to be willing to be patient. So thanks for listening to the show this week. And thanks again to Ryan Neal for the market report at the beginning of the show. And I look forward to seeing you all next week.
Thank you for joining The Revolution. We are over and out until next week, when we'll continue to fill you in on all that matters most in our local Bend and Eugene real estate scenes. See you next time on The Real Estate Revolution.